Every year, millions of people open their first investment account filled with excitement and hope. They've heard stories of ordinary people becoming wealthy through the stock market, and they want to be part of that success. Social media is full of posts, videos, and groups promising quick riches and guaranteed profits. But what happens next? For many, the dream quickly turns into disappointment. In this video, we'll explore why 90% of new investors lose money and, most importantly, how you can avoid making the same mistakes. New investors often start their journey with high hopes. They watch YouTube videos, follow finance pages on Instagram, and join Telegram groups. The excitement is contagious, and everyone seems to be talking about the next big stock or the fastest way to make money. But this excitement can be dangerous if it isn't backed by knowledge and a solid plan. Many beginners jump in without understanding the basics of investing, believing that success is just a click away. After a few months, reality sets in for many new investors. Some lose a small amount, while others lose a significant portion of their savings. The disappointment is real and fear starts to take over. Many begin to believe that the stock market is nothing more than gambling, and they warn others to stay away. But is the market really the problem, or is it the way people approach investing? Truth is, the stock market itself isn't the issue. The biggest problem lies in how beginners invest. Most new investors enter the market without proper knowledge, without a clear plan, and with unrealistic expectations. They let their emotions guide their decisions instead of relying on logic and research. This approach almost always leads to mistakes and losses. Good news is that these common mistakes are not inevitable. With the right mindset and approach, anyone can avoid falling into the same traps. Investing is not about luck or gambling, it's about discipline, patience, and continuous learning. By understanding the reasons behind losses, you can take steps to protect your money and grow your wealth over time. One of the biggest reasons beginners lose money is investing without learning. Many people jump into the market based on tips or rumors without understanding how stocks work or what makes a company valuable. This lack of knowledge leads to poor decisions and unnecessary risks. Successful investors make it a priority to learn before they invest. Another common mistake is following tips from friends, social media, or online groups instead of doing your own research. While it's tempting to chase the latest hot stock, relying on others' advice without understanding the fundamentals can lead to losses. Always do your own research and make informed decisions. Many beginners enter the stock market hopping to get rich quickly. This mindset leads to risky bets and impulsive decisions. The reality is that investing is a long-term game. Trying to make fast money often results in losses and disappointment. Patience and discipline are key to building wealth over time. Emotions can be powerful, but they often lead to poor investment choices. Fear, greed, and excitement can cause investors to buy or sell at the wrong times. Learning to control your emotions and stick to a plan is crucial for success. Logic and discipline should guide your decisions, not feelings. Some beginners make the mistake of putting all their money into a single stock, hopping for big returns. This approach is risky because if that stock fails, you could lose everything. Diversification is a fundamental principle of investing. Spread your investments across different stocks and sectors to reduce risk. Ignoring risk is another major reason why new investors lose money. Every investment carries some risk, and it's important to understand what you're getting into. Successful investors assess risk before making decisions and only invest what they can afford to lose. Never ignore the possibility of loss. Using borrowed money to invest is a dangerous strategy. If the market goes against you, not only do you lose your investment, but you also owe money. This can lead to financial stress and long-term problems. Always use your own funds and avoid taking loans for investing. Trying to time the market, buying at the lowest and selling at the highest, is almost impossible, even for experts. Many beginners lose money by constantly buying and selling, hopping to catch the perfect moment. Instead, focus on long-term investing and let your money grow over time. Selling investments too early is a common mistake. Many beginners panic when prices drop and sell at a loss, missing out on potential recovery and growth. Successful investors stay patient and give their investments time to grow. Don't let short-term movements scare you out of the market. Investing without a clear financial goal is like traveling without a destination. You need to know why you're investing and what you hope to achieve. Setting goals helps you stay focused, make better decisions, and measure your progress. Successful investors always have a plan and a purpose. Successful investors share a few key habits. They keep learning, invest regularly, diversify their portfolios, stay patient, think long-term, and control their emotions. These habits help them avoid common mistakes and build wealth over time. By adopting these practices, you can improve your chances of success in the stock market. Stock market rewards patience, discipline, knowledge, and consistency. Investing is a marathon, not a sprint. Start small, keep learning, stay disciplined, and let time work in your favor. By avoiding common mistakes and focusing on long-term growth, you can turn your investment journey into a rewarding experience. Remember, success comes to those who are prepared and persistent.